Hey everyone, welcome back to Corporate Decoder, the place where we decipher the language of big business so you don't have to. Today we are diving into Brady Corporation's latest report, and let me tell you there is something brewing in their latest numbers that might surprise you. Alright, let's jump right into what Brady Corporation, the folks who make labeling and identification solutions, like safety signs and labels, are telling us about their performance. On the 17th of November 2025, they dropped their financial report for the first quarter of their fiscal year 2026. This filing is mainly about their financial results and how they are doing, which is always the most interesting part for investors. And US watchers are like it's like getting a peek behind the curtain of their business and seeing if the engine is running smoothly or if it's sputtering a bit. They put out a press release detailing all the juicy financial figures, and this is what we are going to break down. They also released some slides that they use for a conference call about these results. Think of it as the Cliff's Notes version of their financial story presented. Visually, it's usually a good way to see what management wants to highlight immediately. So what did they say about their operations and how they are doing financially? This is where we get into the numbers that really tell the tale of the company's health. Now, this number here isn't as fun as a profit margin, but it is a unique identifier for this filing, something the SEC uses to track reports. This filing is for the fiscal year 2026, but the report is being filed in late 2025, as is standard for these kinds of documents. This little interesting tidbit just means they are not an emerging growth company, which means they have to stick to all the standard reporting rules without any of the extended transition periods that smaller companies might get for new accounting standards, so they are playing by the grown-up rules. The company has Class A non-voting common stock and its ticker symbol is BRC. This is what you would buy if you wanted to invest in Brady Corporation on the New York Stock Exchange. So let's get to it. The big question is, how did Brady do in its first quarter of fiscal year 2026? We are looking at their performance to see if they are growing, if they are making money, and if their strategy is paying off. While this specific filing is a bit light on detailed financial tables directly embedded within the HTML here. It refers us to two exhibits, the press release and the informational slides for the nitty-gritty financial details. Since we do not have those exact numbers here, I will tell you what to generally look for when you review these types of reports for a company like Brady Corporation. You want to see revenue growth, which means they are selling more products. You also want to see profitability growth, especially in net income or earnings. Per share, which is the profit divided by the number of shares outstanding. This tells you if they are becoming more efficient at turning sales into actual profit. A key thing to watch for is the comparison to the same quarter last year. If revenue is up 10%, that is great. If it is down 5%, that is a cause for concern. Similarly for profit margins. If their profit margin is increasing, they are doing a better job of managing their costs relative to their sales. But if their costs are rising faster than their sales, then that margin will shrink. That could mean they are facing higher costs for materials or labor, or perhaps they are having to lower prices to compete. We also want to understand the story behind the numbers. Did they launch new products? Did they acquire another company? Did they face unexpected competition or economic headwinds? The press release and slides often provide this context. For example, if they reported strong sales in a particular product category, like their industrial labeling systems, that suggests that part of their business is booming. If they talk about expanding into new geographic markets, that could be a sign of future growth. It is also important to consider the overall economic environment. We are often looking at these reports in the context of inflation, interest rates, and consumer spending patterns. If the economy is slowing down, companies selling physical goods, like labels, might feel the pinch. Looking at Brady Corporation, specifically, they operate in a fairly stable industry, but one that is also mature. They are not a flashy tech company, but they provide essential products for safety and organization for investors. It is about consistent performance and steady growth. Now, normally at this point, I would be diving deep into a table showing figures like total revenue cost of goods, sold gross profit, operating expenses, and net income. I would be comparing the current quarter numbers to the previous year's numbers to pin in major shifts. For example, a 20% increase in cost of goods sold, while revenue only increased 5%, would be a red flag indicating rising input costs are eating into profits. Or I would scrutinize details like selling general and administrative expenses. If these are rising much faster than revenue, it might suggest increased marketing costs or expand eye on efforts that haven't yet paid off. But for now, based on the information provided, we know that the company has officially announced its fiscal 2026 first quarter financial results and has made the details available through these exhibits. When you see these reports, remember they are more than just numbers. They are a reflection of a company's health, its strategy, and its position in the market Brady Corporation is in. Business that serves a wide range of industries from manufacturing to healthcare, which can offer some resilience during economic uncertainties. However, they still need to innovate and adapt to stay competitive. My take on this particular filing is that the most crucial information will be found within the referenced press release. And slides, we are told, are attached without those specific figures. We can't give a definitive analysis of their financial health for the quarter. However, the fact that they are filing this report on time and providing these details is standard and necessary procedure for a publicly traded company like Brady Corporation. What we can infer is that the management team feels confident enough about their performance to share it publicly as a viewer looking for the Tory, we are waiting for those revenue numbers, profit margins, and any commentary on future outlook if they are reporting growth. It suggests their products are in demand, and their business strategy is working. If they are facing challenges, the report will likely offer some explanation, whether it is economic conditions or internal operational issues. Ultimately, understanding these reports is about piecing together the puzzle of a company's performance and making informed decisions, or simply satisfying your curiosity about how the corporate world operates. Alright, that is our initial look at the Brady Corporation filing for their fiscal year 2026 first quarter. What do you think will be the most significant takeaway from their full financial results? Let me know in the comments below if you found this break. Down helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more straightforward analyses of business documents. Don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we will decode another report soon.